USDC issuer Circle is becoming a bank? Okay, we got to take a closer look at this. Welcome back to the channel. Hit that subscribe button and click the bell icon so you know when new media comes out. Thank you for your support, especially for sharing and liking the videos that we publish. It does help us achieve greater visibility in the algorithm, and it helps us overcome any kind of suppression that may be happening towards cryptocurrency content creators. All right, jumping straight into it. Here's a blog post from circle.com entitled, "Our Journey to Become a National Digital Currency Bank." Wow, not really sure what that means. Okay, well, they go on in depth to talk about how they could build a global digital currency bank and how that was part of their roadmap or their vision for Circle and USDC when they went that direction 3 years ago at the outset. So they've had this in mind for some time. They say that right now they've, as they know, and as you and I know, USDC has become an important part of the ecosystem. Stablecoins in general are used because they're useful. Some would argue that the existence of Tether is what created wash trading such that there was a pump in 2017 creating Bitcoin's overinflated price, and that maybe the correction in that side of the bull market and that side of the larger halving cycle and the stock to flow model, that it was maybe a little bit artificial. Not sure that I agree with that, but Tether sure was useful on exchange. And USDC debuted after that point as an alternative to Tether, something that held itself to a higher regulatory standard because it operated according to the laws of a state bank, not at the federal level. But it said that they designed from the beginning USDC to conform with stringent US money transmission supervisory and regulatory standards. And we see that has held true in the following years. Currently, over 27.5 billion USDC are in circulation. And they say they're building their long-term standing commitment to trust and transparency and accountability. Great. But they want to become a US federally chartered national commercial bank. That means they've got to play by the rules of all the national commercial banks with a federal charter. They say they intend to become a full reserve national commercial bank operating under the supervision and risk management requirements of the Federal Reserve, the U.S. Treasury, the OCC, and the FDIC, making them eligible for insurance. Imagine that, having your USDC accounts be backed with FDIC insurance. It seems like, I don't know, it seems like with that particular move, there might not be as much alpha in using USDC. I'm spitballing here, but there's always the possibility that because it's such an incredibly thickly walled garden that it may not have as big a place in the DeFi ecosystem. Maybe, maybe not. Don't want to FUD here, but it does make me question. Generally speaking, when the FDIC gets involved, as the risk goes down, the reward tends to go down with it. So I don't know if that'll be a direct correlation or direct one-to-one relationship as this happens, but they want full reserve banking, and they believe that full reserve banking can lead to not just a radically more efficient, but also a safer, more resilient financial system. I think they're right. Most of us have been burned by fractional reserve banking, and most of us before the advent of Bitcoin, if we were listening to people like Ron Paul, already kind of believed that the Federal Reserve kind of playing tricks with the books, right? Cooking books. So fractionally reserved banking with the various member banks that use FDIC insurance and that rely on the Fed system, right? The Federal Reserve System. They've been problematic for some time in that our US dollar has not ever equaled one full US dollar unless you held it in cash. But even then, paper notes, they could be invalidated if they're past a certain age. Kind of an issue overall with fiat currency. And I wonder if that's really going to be fixed by Circle here. Certainly with that small amount, right, of just under $30 billion, it's a step in the right direction, I think. So I do agree with them. They say they've got an attestation that shows how the reserves are made up of cash equivalents, and other high quality investment grade assets, all issued within the United States rather than offshore, and consistent with the requirements of the regulators of the United States. You figure if you're holding cash reserves somewhere else, if you're holding some kind of value somewhere else, it could be valued in a different way, and it might be audited and regulated in a different way. For example, you're banking in the British Virgin Islands or the Maldives or some other place, right? It might not be exactly the same and might not pass muster according to U.S. regulations. This is the document they're referring to. It shows that the cash and cash equivalents that USDC is made up of or backed by, that Circle holds, only equals about $13.5 billion of the $27.5 current billion that are claimed to be in the USDC ecosystem. Beyond that, Yankee CDs take up another almost $3 billion, U.S. Treasuries about another 2.7, commercial paper is another $2 billion, corporate bonds at $1.1, and municipal bonds $0.1 billion or $100 million. And they say that currently makes up 100%, or at least at the time of publication on this USDC reserve breakdown, that made up 100% of the circulating supply of USDC. They go on to define what cash equivalents are, and they say that they're securities with an original maturity less than or equal to 90 days. So, meaning that they don't have to be very, very mature securities that have been around for 6 months even, or more than 3 months. So definitely less than 90 days. And they haven't really laid out what the breakdown is there. I suspect that if we saw the breakdown between the cash equivalents and the cash, we might not be quite as confident in the claim of this total reserve breakdown. However, if we can take them at their word and offer a little bit of trust here, I guess it makes us feel better about how USDC is backed as opposed to its competitor Tether, in that there are so many more Tether printed and so much less proven backing within the Tether breakdown of its reserves. At any rate, it's generally believed that USDC does have the reserve that they say they have. They talk about that, and they of course publish their reserve breakdown there openly. They go on to say that Basel III is a standard that's used for banks that operate at the level that USDC or Circle wants to operate their new venture. They say it mandates that banks must maintain sufficient high quality liquidity assets or liquid assets to ensure they can meet the liquidity demands of such a stress situation, such as when people want to remove all of their assets. So $1-to-$1 liquidity during high stress periods, such as a bank run. And we've seen this in our lifetimes, right? With the 2000 global financial meltdown and the ensuing problems in the real estate markets, right? With values plummeting and all kinds of serious value drain across all financial sectors. So we've seen this not that long ago, and they claim that Basel III, that it creates a bit of a standard there. It defines liquidity coverage ratio, or LCR, as the amount of high quality liquid assets, or HQLAs, on a bank's balance sheet divided by the expected net outflows in a 30-day stress case, and mandates that banks maintain their LCR above 100%. I think translating that into plain English, they just mean to say that they must back their printed holdings in terms of the stablecoin to an expected amount of 30-day massive rush stress test. So it's expected that, say, 70% all of the currently available, or we'll make the math easy, out of the almost 30 billion USDC that are in circulation right now, they need to minimum hold whatever the amount is. Let's say it's 20 billion that could be expected that everybody pulls out of the USDC system in a 30-day period of great stress, right? Of great financial distress. And they would have to hold at least that much in high quality liquid assets. Couldn't just be something that's unable to move quickly, like some kind of a bond or something else that is not able to be liquidated fast enough to cover the outflow. There you go. Liquidity coverage ratio. New vocabulary term for those of us who pretty much just focus on mining. You figure if you're pegging any of your mining profits over to something like USDC, you better know it's backed. And that's what they're claiming that they're doing, according to that Basel III quality standard, or high quality liquid asset standard, and having the correct ratio of those assets for a 30-day run. They say they've always held themselves to a high standard of regulation because they operate at the standard of a state bank. They say we've always exceeded and will continue to exceed the bank grade LCR and HQLA requirements under Basel III. And they say as we move forward toward a national bank level regulatory supervision, we will begin to publish information about the fundamental liquidity of USDC and our liquidity coverage under Basel III. So while they're showing us currently what they're roughly backed by here, in the future, they're promising to show us how liquid all of this is, meaning this cash and cash equivalents, giant sort of swirling basket of, double speak, it's going to have to be a lot more clear. So yeah, the other categories, which again, don't even total the 27.5 billion that is the current issued number of coins in circulation, they're going to need to be even more meticulous about asserting to us, the public, people who trust their coin, exactly what the breakdown is. I've highlighted in green anything that's a forward-looking statement, and we'll more on that later. For those of us who don't speak legalese natively, I don't really either, but I do try to read things carefully, and I think I've got it here, where they say, as specific national supervisory standards for dollar digital currencies emerge from the President's Working Group, we will proactively work with our national regulatory counterparts on the ultimate commercial adoption of new dollar digital currency standards. Circle isn't just making a bid to become a national bank. They're really positioning themselves, well, first off, to take some arrows, right, by being the first people out in front of this new expedition into uncharted territory, but also to help create the legislation that that will decide moving forward how stablecoins like USDC are treated in the United States. I think that'll be a very solid pattern for how they might be treated in the EU and the eventual Euroization of stablecoins, which we don't have today. But this working group and some of the decisions that come out of it may help create the very first Euro stablecoin and the first yuan stablecoin or decentralized yen or other alternative stablecoin. Maybe it's a British pound. We don't know what that'll look like today. But as it is right now, the US dollar reigns supreme in stablecoins within cryptocurrency. And it could be that what Circle works on makes it a global phenomenon that is easier to adopt by other national currencies, other fiat currencies. We'll see. A bit more information. They talk about having created a statement, published a statement, because there are multiple entities that are being referenced when we talk about news like this, or when they talk about news like this. When I talk about news like this, I just show you this card. This is not legal, financial, or business advice. I'm just covering the news cycle, right? I'm just showing a blog post that they released. But they have some statements that they need to make in order to cross all their T's and dot all their I's. That is to say, they need to be very clear about which entities they're discussing. So Circle Internet Financial Limited, or Circle, we just call them Circle, and then Concord Acquisition Group, hereinafter Concord, right? So the rest of this document will just refer to as Concord. And then Circle Acquisition Public Limited Company. So 3 different entities that they refer to here. And one just as the company. They keep it simple for their language. They say they've already filed a registration statement on Form S4 with the SEC that shows the proxies and sort of shows the relationships, the connection to all of these different groups. And then they use another future-looking statement. Concord will file other documents regarding the proposed transaction with the SEC. And then they talk about participants and non-solicitation and forward-looking statements. Again, this is why I wanted to just mention this. When a blog post like this is published, it's a pretty big deal for a company like this. This isn't just another article by, say, Crypto Potato or CoinDesk. They're publishing a press release that's going to have serious weight in the future. I'm excited about the news. I'm very excited to see that Circle is making this move forward. Does it increase my trust in USDC as a stable currency? Yeah, it does. Do I think, again, like I mentioned before, that there may be some possible downside to going this route? Maybe. But these are also signs of growth within and maturity within the cryptocurrency scene that will help to create regulation that helps bridge the gap between pure cryptocurrencies like Bitcoin, pure cryptocurrencies that are decentralized, permissionless, and don't really have a real world corollary in terms of their direct use for day-to-day purchases and day-to-day use. And then fiat currency that we're so used to at the point of sale, using cash. Having there be some kind of a bridge, I think, is important. And so somebody's got to take those arrows and be the first one to go out into the frontier and not see what's ahead and try to blaze a trail for everybody else. So I applaud Circle for doing this. It's going to be a huge deal. It could be that this sets up USDC to become sort of a de facto central bank digital currency. So the first CBDC could be an unofficial CBDC in the form of USDC by Circle when they do win this national charter or federal charter as a national bank. So good luck to the Circle team. I'm excited by the news. If you're just checking in on this, well, first off, there are links to everything that I've referenced down below in the description of this video, including Basel 3, the standard that they talked about having followed. So you can see a copy that's published by the issuing authority by following those links at bis.org. You can read all of this for yourself. But what do you think? Are you excited by this? Do you think this is good? Do you think this is bad? And in what ways? Tell me down in the comments section. Thank you so much for watching to the end of the video, clicking that thumbs up, sharing this video. Again, most of us in cryptocurrency talking about it, our content's a little harder to find. Wonder why that is. You can help. Love your face. I will see you in the next one. Thank you so much for watching all the way to the end of the video. If you want to be notified of videos like this in the future, first off, click subscribe, press the bell icon. Additionally, you can sign up for the Mind Your Biz email newsletter. That'll give you exclusive access to certain freebies, notifications for deals within the cryptocurrency mining space, as well as some of our flash sales for merchandise, which you can buy with cryptocurrency. That's right. It's the only cryptocurrency merch that you can buy with cryptocurrency. We practice what we preach. As always, thank you so much for watching. You're the reason I make this media. I love your face, and I will see you in the next one.